Welcome to The Great Financial Story, a YouTube channel dedicated to exploring the most significant financial events in history. From financial bubbles and market crashes to economic booms and busts, we dive deep into the stories behind the numbers to give you a better understanding of how the financial world works. In today's video, we'll discuss about the Asian financial crisis that happened in 1997 to 1998. The Asian financial crisis, also known as the Asian Contagion, was a financial crisis that affected many countries in East and Southeast Asia in the late 1990s. It began in Thailand in 1997 when the Thai government was forced to float its currency, the baht, after being unable to defend it against speculative attacks. This caused the value of the baht to plummet, leading to a crisis of confidence in the Thai economy and spread to other countries, including South Korea, Indonesia, and Malaysia. One of the main causes of the crisis was the high level of foreign debt that many Asian countries had taken on. Many of these countries had been borrowing heavily from international banks and investors in order to fund infrastructure projects and stimulate economic growth. However, as the economies of these countries slowed down and their currencies began to weaken, it became more difficult for them to pay back these debts. Another factor that contributed to the crisis was the overvaluation of many Asian currencies. Prior to the crisis, many of these countries had pegged their currencies to the US dollar, which helped to stabilize their economies. However, as the US dollar began to strengthen, the value of these currencies increased relative to the US dollar, making their exports more expensive and less competitive on the global market. In addition to these economic factors, there was also speculation in real estate and stock markets in many of the affected countries. Many investors poured money into these markets, driving up prices and creating asset bubbles. When the bubbles burst and the markets crashed, it further exacerbated the economic crisis. The Asian financial crisis had far-reaching consequences for the affected countries. Many of them experienced recessions, with their economies shrinking and unemployment rates rising. Many banks and other financial institutions also went bankrupt, leading to a lack of access to credit for businesses and individuals. To address the crisis, the International Monetary Fund, IMF, provided financial assistance to many of the affected countries. In exchange, these countries had to implement structural reforms, such as reducing government spending, liberalizing trade and investment, and privatizing state-owned enterprises. These measures were controversial and led to widespread protests in some countries. The Asian financial crisis ultimately had a significant impact on the global economy. It led to a drop in demand for goods and services from the affected countries, which impacted the economies of other countries that traded with them. It also led to a loss of confidence in emerging markets and increased risk aversion among investors. In the years following the crisis, many of the affected countries have implemented a number of reforms to strengthen their economies and reduce their dependence on foreign borrowing. These reforms have included improving the transparency and regulation of financial markets, increasing domestic savings and investment, and diversifying their export markets. Join us as we journey through the history of money and markets, and learn how the decisions of policymakers and investors have shaped the world we live in today. Whether you're a seasoned investor or just starting to learn about finance, there's something for everyone on The Great Financial Story. Stay tuned for our upcoming videos, and don't forget to subscribe to our channel to stay up to date on the latest financial stories. Thanks for watching.